I have directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets,
which was then followed by a period of global economic turmoil, after which the neoliberal world order was ushered in by Ronald Reagan and Margaret Thatcher. This neoliberal world order was characterized by, number 1, lower tariffs, number 2, lower barriers on investment around the world, number 3, flexible exchange rates, and number 4, the US guaranteeing security for everyone that at least played somewhat nice with the United States. In line with its free market principles, the neoliberal order was far less structured than the Bretton Woods order. There was no formal agreement now in which countries promised to use US dollars. They just did so because it was the most convenient and most reliable currency out there. However, in this system, any non-US nation had a very strong incentive to hoard US dollars by making it easy to export to the US and making it harder to import from the US. Notably, despite praising the virtues of free trade, the World Trade Organization did actually allow developing nations to have higher tariffs against the US than the other way around, precisely because the US hoped that by making the world richer, it would become friendlier, just as has happened before with Germany and Japan. Compared to Bretton Woods, the number of green countries, so to say, got much bigger in the neoliberal order. As long as you were willing to play by the rules of the World Trade Organization, you got good access to the massive US consumer market, the US dollar banking system, and as a bonus, US Navy protection of global shipping. That sure sounds like a pretty good deal. But of course, the US again got something very, very big in return for it. With the fixed exchange rates of Bretton Woods gone, Stephen Miran writes that reserve demand for American assets pushed up the dollar, leading it to levels far in excess of what would balance international trade over the long run. So, thanks to flexible exchange rates, the US's exorbitant privilege arguably became even stronger. A strong dollar meant that the US could keep its massive military all over the world, despite becoming a far smaller economy relative to the rest of the world and relative to its dominance in the 50s. On top of that, the strong dollar made Americans in general much richer than they would otherwise have been. However, on the flip side, it did make manufacturing in the US much more expensive, causing stable manufacturing jobs to leave the country, especially when China joined the World Trade Organization in 2001 in something that became known as the China Shock.